Yeah, welcome once more to my channel. And today in my channel we are going to be looking at posting into the ledger. Now, before we go into our video, what do? Subscribe to my channel, like my videos, and turn on the notification button for more live updates. Now, going into the ledger entries, there are certain rules that we must follow when posting into the ledger entries. What are those? One, every income must be recorded on the credit side of the book, and then every expenses must be recorded to the debit side. There's a caveat to that. When you are posting and you have cash account, every cash account or a cash book entry, incomes, you switch that principle. Income goes into the debit side and expenses goes into the credit side. That is the only time that we have switched principles. We can also apply that principles in the income and expenditure account, in which every income goes to the debit side and every expenditure goes to the credit side. But today we are focusing just on the ledger entries. Now, looking at this, we have enter the following in the ledger entries of ABC and Sons Nigeria Limited. January 1st. In January 1st, started business with cash, 42,000 naira. Now, we have two transactions that are recorded inside this particular lineup. Now, it said started business with cash. Remember, under the factors of production, we said that capitals are money or money set aside for creation of further wealth. Now, when you set money aside for creation of further wealth, that is the money you use to start up a business. Therefore, started business with becomes what? Capital. Then it started with cash, meaning that cash was spent. Capital was saved, cash was spent. So we have two transactions there, which is the capital account and then the cash account. Now, let's take this. Let me start with the capital account. I'll just give a general heading, ABC and Sons Nigeria Limited. Now, I'll just take this because I'm opening capital account first. Then, this is my debit side. This is my credit side. Now, when we are starting business with capital, now capital is what? Because the money is saved, it goes into the credit side. We have started business, our capital account, we have January 1st. The capital that was saved was in the form of cash, so we put down the cash particulars. And the amount that was saved is money signed on up top. We have 42,000 naira. Now, you go to the debit side, there must always be a corresponding entry. So we have balance brought down. We give us 42,000 naira, but we need to close this side of the account also. So remember, when closing your account, you always use double lines to close to indicate that you are done with that transaction, and Z to close on this side also to indicate you are done. So this is my posting into the capital account. Then remember, I told us we have two transactions under this particular. We have the capital account, which is the started business, and we have the cash account. Now, instead of preparing one cash account for each of all these transactions, I'm going to prepare a general cash account in which every cash transactions will be entered into this cash account. Say we have our cash account, AC for account, I have my debit side, I have my credit side. Now, what did I tell us? Remember when we begin, I told us that in this cash account or cash book, we switch the principle in which every expenses goes to the what? To the credit side, and every income goes where? To the debit side. So it says started business with cash, meaning that he is spending cash, and because he is spending cash, cash will go to where? To the debit side. Do we understand? So this will give me January. Okay, sorry, capital is income. So we have January 1st, and this cash is what? Capital, that's the transaction. And our amount is what? 42,000. Then the second transaction is say purchase goods and paid with cash, meaning that money was spent in purchasing the goods. Now you might say he's having the goods, why does it need to go into the expenses? And when he says the goods is going to make profit, remember it's a definite law that production is not complete until the goods produced get to the hands of the final consumer. As long as he's holding the goods and he has exchanged that goods for money, he has not recovered his money, nor has he recovered the profit. That becomes what? An expense. It's a liability to him until he is able to convert that particular goods that he bought with his money into the equivalent, the money equivalent, and then makes profit. That is why we always have sales as income and purchases as expenses. So I have January 2nd, purchases, he bought goods and paid with cash. So our particular is purchase. Purchase is 12,000. January 8th, cash sales. Now sales is income. So I'll go to my debit side. January 8th, the particulars will be sales. And then you receive a cash of 53,000. Then we have paid rent by cash, paid expenses. So on the January 12th, the particulars is rent that was paid, and the rent that was paid in cash is 6,000. Mind you, it is only cash transaction that I'm putting into our cash account. January 28th, we have paid insurance by cash, so it goes to the credit side, which is January 28th, insurance. He paid the sum of 7,000 naira. Then we have January 31, paid salaries, so expenses. I'll record it on as salaries. And the cash that was paid is 12,000. Now, when we calculate our credit side and our debit side, these two, sum them up, is going to give me 95,000. Obviously, this is not up to 95,000. Definitely, I'm going to close with my debit side. So this will give me 95,000. So my balance brought down will be here. How do we calculate balance brought down? You sum up all the sum total of the amount you have on the credit side, and then you subtract it from the sum total of the amount you have on the debit side. This 24,000, 31,000, 37,000. So I have 95 minus 37, 8, which will give me 58,000. So my balance brought down is 58,000. We'll close them with double line to give me all these, sum them up to total, we must still arrive at 95,000. So this balance brought down can also be the balance carried down on the debit side, meaning in the next accounting season, we are starting with that balance carried down. Now we are done with all the cash transactions. I'll then take individual transactions from the following particulars. I have purchase, I have sales, I have rent, I have insurance, I have salaries. I'll be preparing their individual accounts. Now, after this, I'll go to this purchases account. Now, purchase, is it an expenses or an income? Remember, he has not converted that goods to his money equivalent. So therefore, it's an expenses. Expenses to the debit side. So we have January 2nd. What did we pay with? In terms when we made purchase, what did we pay with? We paid with cash. And the amount that was paid is 12,000. Now, if there is any purchases, I would have entered it into this place to sum all the purchases. Then I will close my account. This is 12,000. Balance brought down. Balance brought down is 12,000. And then I'm closing with double line, 12,000. That is all. Then the next one is sales account. Sales account. This is my debit. This is my credit. Sales is an income, so it goes into the credit side. We have January 8th. January 8th, we have, what did we receive when we sold? Cash. Our cash is how much? 53,000. My naira sign, then I close. This will give me 53,000. And then my balance brought down, it's 53,000. Remember, we always need to balance up our accounts, so we must close the debit side as well as the credit side. It's wrong to leave it vacant. Now we are done with sales account. We have rent account. This is my rent account. This is debit. This is credit. Now we close, open. Rent is an expenses. Expenses goes where? To the debit side. So good. So my expenses is January 12. We paid rent by cash. The amount of cash that was paid is 7,000. So I'll close my account. 7,000. My balance brought down. It's 7,000. Then we close 7,000. After the rent, we have what? Insurance. Insurance account. We have debit side. We have credit side. Insurance is an expenses, so definitely goes into the debit side. So insurance is on the January 28th. Insurance was paid by cash. How much? 7,000 naira. So my balance brought down is 7,000. And then I close with my double line. Mind you, we're maintaining the same principle. So this is 7,000. Now, under the last one, paid insurance. We have salaries. So this will be my salary account. Now, tell me, just take a guess, where will salary be going into? Yeah, salary is an expenses. So where are we going to record it? Definitely we are recording it on the debit side. Now, if you guess the debit side, definitely you are wrong. Thumbs up to you. So we are recording the salary into the debit side. This is January 31st. Salary was paid by what? Cash. And our cash is what? 12,000. So I will close 12,000, and this is my balance brought down, which is 12,000. 12,000. Now, this brings us to the end of our class. So from what we've learned today, we've seen how we can post transactions into the ledger account. So thank you so much for watching. Don't forget to do what? Subscribe to my channel, like my videos, and turn on the notification button for live updates. Thank you.